This has got to be one of the most tricky tickers that I've ever charted. Let's go ahead and verify exactly what I mean by that. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a WULF, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right in. Okay, so as you can see here, we're looking at WULF in the daily chart, and we are definitely within a broadening descending wedge. So this wedge usually presents a bullish outcome. It typically, per the playbook rules of this formation, we do have to complete the 3 tests of the resistance before a capitulation event, and then a true test for a true breakout on test number 4. So in this case, it is showing us that we are in the breakout of number 4 per this trend line here, per this resistance. So the reason why I have this circled and the reason why I have this arrow here and this X will be mentioned in just a bit. That's part of the trickery that I see happening within WULF. Please know that I'm not perfect. I'm human, just like you guys are. You know, I'm not any different. The only thing is that I have a skill set to where I can look at things like other people can't, or I have more experience. Just to put it better, that, you know, better said, it's just a little more experience, a little more exposure than a few other people. So I appreciate you watching this. Okay, so please know that I'm not perfect within this, and I wanna speculate within this ticker here because there is something very interesting happening. Okay, so let's go ahead and move on to the next chart, but we will be back here. Okay, so this is going to be the statistical side of the analysis because everything looks bullish first. Okay, so it's looking like we're doing the 3 tests capitulation. We have the breakout on test number 4, and it's already above the newly converted resistance, which is this line, and it's now in the validation process of making it a potential support before continuing on to the upside. Okay, so now as we move on in the analysis, this is going to be the statistical side of the analysis to back our upside thesis some more. But don't stop the video here because I am not bullish on WULF just yet. Okay, so for the new viewers and new listeners, you are looking at volatility here represented by this indicator BBWP. Volatility is direction neutral. So in order for us to gain a bias for direction, since it is neutral, we pair it with an indicator called stochastic momentum, which is proprietary to TradingView software, which, by the way, the link is in the description below if you want to consider joining. I think you get maybe $30 upon sign up or something like that. Don't quote me, but your sign up does help me out a lot. Okay, so yeah, definitely consider that. Check it out. Okay, so yes, so we were looking at here volatility. Okay, so we pair it with the stochastic momentum indicator since it's a momentum-based indicator. It's very similar to an RSI. So I have tested this indicator several times throughout many tickers, and I have gotten a hit rate of about 70 to 91% in accuracy in guessing the asset's direction. So it's not perfect, but it's very good to consider. I say this very often, I know, yada, 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 but let's go ahead and continue, right? Okay, so per the back test, which I actually ran by hand, I actually ran the back test by hand last night throughout the entire trading history of WULF, particular to the 2-week chart. So the biweekly chart has a back test of this. Let me go ahead and explain it to you. Anytime that volatility has expanded into critical volatility zone, which I consider to be anything above this blue line here, which is the 90 percentile. Anytime that the asset or the volatility has increased above this critical volatility area, I have taken note of the iterations upside thrust versus the duration versus the amount of times that volatility versus momentum have guessed the direction correctly together, okay, versus incorrectly. So upon that back test, I got some metrics back here that are very interesting, actually. So now, throughout the entire trading history of WULF, pardon me, on the biweekly chart, we have a total of 16 iterations, of which I'm sorry, we have a total of 23 iterations, of which 16 were guessed correctly to the upside. That gives us an averaged upside accuracy of 69.56% with an averaged upside thrust of 68.70% over the span of just about 3 months. Okay, so now please remember that these are not certainties, and above all, please remember that this is the average duration, okay? Because I constantly get like these comments saying, well, your move didn't happen, oh, you didn't, blah blah blah. Like I'm telling you the average duration. You're speaking to me on the third day of like 184 days average. Okay, okay, guys, please don't be silly. Let's listen carefully and see what the data has to say first. Okay, so please remember, the 93 days is equivalent to approximately 3 months. Okay, so in this case, the 68.70% move to the upside would essentially put price action in confluence with the 2.618 golden mean, or Yoda zone, as as some of the members in Discord call it. Yoda zone, my goodness. Okay, so yes, it has a confluence with the 2.618. This target here and the target from the 68.70% is something that I want you to remember. This is the space between 190 and 194. So $1.90 and $1.94. These are very important targets. Okay, now let's go ahead and move on to the next chart. I hate calling this damn formation out because it usually has a lesser hit rate. Okay, but it may be pertinent to this situation here. But it's part of the trickery. It's part of the whole crazy game that's happening with here. So within this ticker. So I want you to take a look at something that's very curious. We were just in the bi-hourly chart. Okay, so the bi-hourly chart, we're going to start first with the Crypstex ARC-Series indicator. So this is going to be this is the ARC DBSI indicator, which actually takes a cumulative score statistically based on every single candle, thus giving us a score right up here. So on the bi-hourly chart, we're looking at the bulls directly in control. So you do have an 87 versus a 13 from the bears. So it looks like we're doing good. Also, the ARC enhanced MACD is suggesting a continuation onto the upside, printing a bullish signal here. Now, DBSI also printed a bullish signal. This is usually a buy. When you have a little blue circle just like this. So see, for example, here it printed this blue circle at the opening of this candle right down here, and it went up, right? So in this case, we are getting a suggestion for a continuation to the upside. Now, if we were to gain a price objective from this cup, which can actually be done by taking a trend line from the top of the cup, which is right at about here, to the bottom of the cup, and to gain that objective, we place it at the top of the handle. Okay, so now the cup and handle is suggesting, guess what? A target of $1.94, just like we talked about right here at the 2.618 at $1.94. Okay, if I'm looking at this, many more people are looking at it as well. Okay, so now as you can see, we're getting the bullish signal. We're getting from both the indicators. We're getting the top target that has direct confluence with the 2.618, and it has direct confluence with our price objective, the statistical price objective of about $1.91. Okay, so thus far we're looking good. But the interesting thing happens when we jump in to the RSI, which is another momentum-based indicator. In this case, this is the relative strength index. Now, before we continue, The relative strength index signal line is this purple line, and the moving average is represented by this pink line, just so you know, okay? So what influences the moving average is actually the RSI signal, okay? So in this case, let's take a look at the immediate short-term time frame. For the new viewers, I actually have made, let me get my my sound card out of the way. For the new viewers, I have made a diagram here for you to follow. These 4 zones are the zones that I would like you to take a look at. They're located right over here. They're just blown up for your convenience. Okay, so the immediate short-term time frame is suggesting that upside that people are looking for. Actually, I'm sorry. Let's go ahead and move on to the 30-minute first. Never mind. Okay, so this is part of the trickery that I was talking about. Okay, my apologies. That was the 8-hour chart, which is not immediate short-term. Okay, so. Wow, ARCa messing up. Okay, so yes, we do have a pretty much a nosedive here. Okay, and it is suggesting a continuation to the downside, and it has since crossed the moving average, which is very bearish. And at this point, the 30-minute immediate short-term time frame is landing right at the junction between the bull weakness percentile and the bear weakness percentile. Usually when we're at this junction, a gravitational pull is to be expected. Okay, we're definitely on our way, and we're primed to enter the bull weakness percentile, the bear weakness percentile in this case. Okay, so now let's go ahead and go over the bi-hourly. The bi-hourly RSI has now failed the bull strength percentile. It has now made a cross below the moving average, and it is still on a nosedive. Okay, so usually I tell people this, usually when we're in these deep areas of either zones, we're likely to be gravitationally pulled into the opposing zone. But in this case, we have now converted the moving average into a resistance, which could be more difficult, you know, for us to come right back up into the bull strength percentile. Now, looking at the 6-hour RSI, we have a nosedive as well, suggesting a continuation to the downside. It has since moved away from the from the deeper areas of the bull weakness percentile, so this is likely to continue on to the downside. Okay, but it's looking like if it does continue to the downside, there may be some support found, not only by the junction between the lower half and the upper half, meaning the bear control zone. We could find that support from there, and also the moving average is what I'm trying to say. Okay, so now the 12-hour RSI is also suggesting a continuation to the downside and primed to enter the very shallow areas of the bull weakness percentile, suggesting a continuation to the downside. In this case, we do have the moving average right down here, which could likely be for us to come back and catch up with it, maybe even surpass it just a little bit before finding a bounce and continuing to the upside. Okay, this is the trickery that I'm telling you about. Everything is pointing up. Everything is pointing up except momentum, except literally directional momentum is telling us down. To verify or to validate our statistical upside and our raw price action upside and the formation analysis, we actually need to look at a higher term time frame from the RSI. So let's jump into the daily. Daily RSI suggesting a continuation to the upside aggressively. Okay, by daily RSI suggesting an aggressive upside, now failing the bear weakness percentile, entering the bull weakness percentile, and the moving average now starting to pivot towards the upside. The 3-day is suggesting an aggressive upside as well, entering the very shallow areas of the bear weakness percentile, suggesting a gravitational pull right into the bull weakness. Okay, and 5-day is also suggesting a continuation onto the upside. It is very much at the very shallow areas of the bear strength percentile, so this likely means a gravitational pull into the bear weakness percentile is likely. Okay, so now that we have these puzzle pieces telling us that the upside is likely to start on the daily, not on the shorter term time frames starting from 12 hours and below. Okay, now we can look at the statistical data and see just how many days we have again. We have 3 months to fulfill this, which means that it is likely for us to find within the next day or within the next session, maybe Monday or Tuesday, there could be a drawback. There could be a pullback first before finding the upside, which I guess could be appropriate to finding a continuation to the downside, catching up with the 13-day moving average, which is right over here. By the way, DBSI, whenever we're above the 13-day moving average, DBSI suggests bull control. We are above that. However, there are certain areas to where we can come back to test, thus creating a deeper handle from the cup, and then realizing our upside move still from this area here. Okay, so now if we go back to our first chart, this is where we can potentially find some danger. Okay, so now this trend line here would essentially delete, and this trend line here would now be the leader. Okay, so we would now make the trend line like this. Let's make it a solid line. And now what you can see here is that we have test number 1, 2. We do not have test number 3 here. And now this would essentially invalidate test number 3 entirely. So now we would actually remove test 4 and put the test number 3 right over here. And as you can see, we are now at the very resistance of test number 3. If there is some upside, it could be very short-lived, potentially to $1.31 before facing a capitulation to the downside. Okay, so in this case, we are not done with this descending broadening wedge, and we could very likely find a downside down here per the playbook rules. Okay, so this is why I mean that it's very, very, very tricky. This is a super tricky chart. Okay, so if you're trading this one, please be very careful. I hope you're listening all the way here, because this is of incredible importance. Okay, everything is looking good thus far. Please remember that the statistical upside of 68.70% is on a bi-weekly chart, meaning that every single candle you see here is a bi-weekly read. So it takes 2 weeks for it to complete one candle. We're about 4 days away from completing this weekly candle, which could be the validator in candle analysis of an upside continuation based on this hammer print at the very bottom of a trend. This is a great signal for a continuation to the upside in the macro perspective. Okay, so there is likely downside to be found first before us continuing to the upside. The downside, I can't exactly tell you exactly where we're going to go, but we can speculate to see where it can possibly land. Okay, so let's go ahead and open up some moving averages as the last part of this video. Okay, so in this case, we do have several areas of support. We do have the 50-day simple moving average landing in confluence with the golden pocket and the 0.5 fib at about 105. I'm sorry, 109, 110. 109, 110 could be the first stop before us doing a number like this, coming back up, then failing this, then coming back down, and looking at the 30-day exponential moving average which has some confluence with the 7-day exponential moving average, and also the NOT 236 at $1.02. That could be another area of support, but it would more than likely be something along the lines of here at the SMA 10, which is located at about 88 cents. Okay, so I wouldn't get overly bullish on this just quite yet. We can actually take an inverse fib from the swing low of the day to the swing high of the day and just take a look at what we have here. Okay, so if we were to dive right into the 1.618, which is suggesting 79 cents, we can now see a support range between 79 cents and the SMA 10, which could be at about 88 cents. 79 to 88 cents could be a likely area for us to find a bounce, and this 1.618, 79 cent is directly in confluence with the low of this candle here. Okay, so this is likely for us to find some support. Usually the thing that you should know here is that usually the third iteration from the resistance test of the wedge usually presents the biggest sell-off. Okay, so if we were to look at a continuation to the downside per the natural playbook rules of this play, we can actually see the lowest target reaching a span or a range between 52 cents at the 2.618 and 61 cents as a form of support. Know that these areas could also be a loading zone per a demand area if you're talking about supply and demand. These would essentially be the areas before I can continue or suggest a continuation to the upside. I don't have a crystal ball. I can't tell you where exactly it's going to go down. Okay, so please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. Do your own DD and we'll be okay. All right, you guys? So if you have any questions or concerns, don't hesitate to reach out, okay? I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community. And yeah, so I think this is a pretty good place for me to leave off. Yeah, I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.